Hey, so traders, we're here. We are in profits, as you can see. We are in deep profits. Yeah, $100 up, $100 up. This is the GBPJPY, the GBPJPY. Yeah, it's January. How is your January? And guys, I wouldn't advise you guys to be trading in January, like before mid-January, of course, before like 15th or 16th of January, because the market conditions are really bad, as you can see. So it's only for the patient. It's only those who are patient that can trade in such market conditions. But if you're still new to this trading, if you're still a novice trader, please stay out of the market. Yeah, please stay out of the market. So let me show you guys a simple breakdown of this GBP JPY trade using ICT concepts. Yeah, using reference points in institutional order flow. Yeah, the order blocks, fair value gaps, liquidity voids, liquidity pools, and stop runs, equilibrium, all that. So let me show you guys what's happening here. So basically, as you can see on the 4 hour time frame, I had mapped out my markets. As you can see, they were clean, right? So look at this. Price is basically making lower lows and lower highs. There's no, it's simple as that. Yeah, it's simple as that. So let me go down to what I did in order for me to take this trade here in these choppy markets of January 2023. This is the best strategy you can be using in 2023. Yeah. All those traders are not using ICT concepts in 2023 are doomed. You are literally doomed. You're going to be manipulated, as you can see. Yeah. If you're using retail trading, you're going to be manipulated and stopped out of the markets prematurely. So as we use smart money concepts, we already know what the uninformed money or retail traders are going to be doing. So let me show you. So we have this liquidity void here. So whenever you have a liquidity void, you always want to wait, right? Liquidity void simply means that price skipped, yeah, price skipped, and we have to fill in the voids in the market. As you can see, price came and really filled in the voids in that market, then roll it to the downside. So we have this push phase all the way to the downside. Then look at what happened. A reversal happened. When the reversal happened, and we broke this trend line here, I knew it was time. Remember, this trend line hasn't been broken in a long time. So for me, the trend line is like a brick wall. If your soldiers break a brick wall, that means it's time that the trend changes. And as you can see, the trend changed to the upside the moment you broke that brick wall, of which most of you guys will call a trend line. So remember, I told you guys we need to know where price is coming from, where price is at, and where price is likely to go. Yeah, that's how ICT works. Yeah, all markets start from a consolidation. So after this push phase here, this expansion here, we retrace back. So we have a consolidation, right? So ICT, all markets start from consolidation. After consolidation, we go to an expansion. And after an expansion, you may come back to consolidation. Then you may have a retracement, an expansion again. After the expansion, the reversal to the reversal, retracement, consolidation. These four interchange throughout the market. So there's no specific order, but you have to know that price always starts from a consolidation. Yeah. All main moves start from a consolidation. That's where the market is collecting orders. Yeah. As you can see here, market was collecting orders here, and there was a liquidity pool here that had been taken out. After it was taken out, you see price continue to rally to the upside. So price has to collect enough money to move. So wait for the expansion move to trade. You have to understand these four scenarios. You have to understand these four concepts, all these four contexts surrounding a trade idea. Then you have to mix them up with tools such as order blocks, liquidity voids, whatever the weather. So let me take you to the 1 hour time frame for a more clearer approach. So I told you, so after the break of the brick wall, yeah, it's an expansion of the expansion. course, this is a long expansion. I waited for a retrace. Price retraced, then it consolidated. After the consolidating, there were equal highs and equal lows. So there were liquidity pools above and below that had to be taken out, right? So look at what happened. This is the turtle soup, right? A manipulative move. It took out this equal lows here, and took out this equal lows, and the retail traders were selling from here, thinking this market was going to be going down because, of course, after consolidation, when price breaks either side, that's most likely where our price is going to go. But as I see traders, we know it's a manipulation move, a turtle soup. After that, price even retested our trend line perfectly. You could either have taken your trade from here, but you always want to be patient, right? You always want to be patient. Look at what price did next. Price rallied to the upside, came back, retested our key level again, consolidated again. After it consolidated, look at where I actually use buy stops to enter this trade there. Let me fast close just a little bit. Let me close before this market. I'm only going to leave 2 positions running. Yeah, that's enough. So when I saw this, I was like, all right, price consolidated here, price consolidating, and then I saw that there was too much buying pressure in the markets, right? Because all the manipulations were happening to the downside. That means price wanted to go to the upside, and we were making lower highs, right? Price is making a lower high here and a lower high here. So there's only one way where price is going up, because we are only taking out what everyone that is selling down. They said we are taking them out, even the guys who sold from here.